I'm Leif Boyd with Granite Funding, and welcome to my mortgage market update for Monday, June 14th. So we saw a nice rebound by stocks in the last week. I think we'd had a lot of dips. Now we're going the right direction, especially if you're a stock market investor or just looking for the overall health of the economy. We're seeing things go the right way. The euro is actually starting to gain against the dollar. Now, I don't know if that's a good or bad thing, but that is actually leading to some market recovery because people want to see a stable Europe. As we saw an unstable Europe, it leads to fears. We're living in a global economy these days. It's a big, what you call a macroeconomic environment where people are triggered by something that happens well overseas, outside of our control, but does affect our bottom line and our dollar. A little unnerving sometimes if you think about the lack of control we have over those things. But then again, we can't go focusing on the things we can't control because there's too many of them. Applications, speaking of the mortgage market, down 35% over the last 4 weeks. Now, this is a positive in my mind. And why is it a positive, you might ask? How is down 35% good? Well, it tells us that the tax credit was a huge part of the business that was going on. But it also tells us if you have buyers who are looking to engage, now is the time. There's going to be a little less competition out there. You may see, not your 16 offers on every house that's in your buyer's price range. If you're a home buyer, man, this is the time to get going. A lot of people have fallen off. They thought, okay, if I can't get the free government money, I'm out of here. I'm not doing it anymore. Well, this is the time for you to get in there and snatch that house you've been looking for. Foreclosure activity is down 3%. Should be a good thing, but we're seeing an unnerving trend that banks are taking back a lot of properties. Foreclosures, a lot of anecdotal stories we were hearing were people sitting in a house for 12 months, 16 months without the foreclosure actually occurring. Well, now the banks have stabilized. They're starting to feel better about their position. So previously where they were letting the assets sit out on the market so they didn't destabilize their balance sheet, they're now going and taking them back. Couple things here, though. That means more bank-owned housing inventory is going to be coming into our market. If you're a buyer, another good opportunity to get looking. Start planting the seeds, with your agent, with yourself, with your spouse, significant other, anyone making the decision that there's going to be some inventory. Might want to start getting the preliminary stages started now. Ben Bernanke came out and said inflation is not a factor. Not worried about it for a while, and that rates may stay low till 2012. I'm pretty sure they'll keep having meetings and keep sitting in front of Congress and doing all those things, a lot of very important things. But it looks like no real activity. We should see some stabilization. Now, once again, circling back to the earlier comments, we don't know what's going to happen in the world and what may affect it in the long run. So, big news of the week. We've got some reports coming out Wednesday, the Producer Price Index, and also housing starts, which will tell us what builders think about the economy. And then on Thursday, the biggie of the week, that's the jobless claims. We'll see how everything stands, see if we're seeing that's really one of the biggest gauges of economic recovery. Are we starting to add jobs and our jobless claims going down? Are we adding more jobs than we're shedding? So if you're thinking about locking this week, that's a great time, Wednesday, early Thursday, to be watching the market and really paying attention to it. Thanks a lot for watching. You go out and make it a great week, and I'll talk to you again next week.